Hello, this is Vance, and this is Monday, September 21st, 2015. These are the CL trades for today using the slow hand method for price action. A couple of things I wanted to talk about on Friday. I didn't have a chart up, and I didn't do the video on Friday. And I forgot to mention that I'm not going to do it on Fridays anymore. I'm just going to do a Monday to Thursday. Fridays, I was like, take off the afternoon. Not going to have time for that. So I'm not going to do these things on Friday. That's the one thing. The other thing I didn't mention last week was that it was about time to look at, because the number of contracts was starting to catch up to the October contract, that it probably would switch over on Monday. And because I didn't mention that on Thursday, and as a result, the amount of contracts did overtake the November contract overtook the October contract in volume, and so today I traded in the November contract. So that was the other thing. That's pretty much it. Let's talk about today's trades. I'm going to try to do this relatively quickly today. Don't want to spend a lot of time on this. A pretty much standard. It was mostly up today as far as pricing was concerned on the November contract, especially from the overnight. I mean, when we look at the overnight, when price opened up overnight, it moved up fairly rapidly. I mean, kept in this channel, and I drew this channel for the overnight, and really close to the close or the open, price was like a spike in channel and developed this trading range right here. And I thought the top of the trading range was about here. Basically, price moved up to this area, pulled back first time, touched the channel, and then really kind of had a turnaround here. And this is a second entry long. It's right at the open. It's really close to the open. It's only just a few minutes after, I guess, 9:02, about 9:05, I suppose, Eastern Standard Time. And I thought it was a relatively good. You got room to get out. Here's my 15 tick stop box. You see room to get out to the top, these double tops here. And so I thought this was really the first decent setup for the day. You could have taken this one over here, I guess. It's off the EMA. It's off this trend channel. You have this established here because you got the first couple of swings out. But like when you're close to the open, and prices can really drive down because of the flood of volume that comes in right at the opening, as far as the oil market is concerned. And so that could have been an influence. You might make a hesitation of putting in a trade there, but as you can see, it did work out. The price shot up there, and then it overshot the channel a little bit where the closes were, and then turned back in the other direction. Now, maybe this is the first break of the channel. Maybe we're going to go to a new low. We didn't get there. I marked this as a trade as well, only because if you keep your stop below these bottoms here, this 15 tick stop box, you had to limit in. That's why I marked it in green. It did kind of stack up, but it's also a second entry long right here. Now, if you put in a buy stop right here instead of limit, if you buy stop at the top of this channel here, it would just get you your first first 2/3 of your contracts off right here. If, on the other hand, you limit it in to give yourself maybe a better opportunity, you would have a little more room. And as you can see, price initially went down. If your stop is below this area, you can see it turned around, and then perhaps you could have limited in a little bit less than that, and then give you a little bit more of a cushion. But either way, it would have only been good for that for your initial two contracts to take off. Now, price resisted up here. This is a second entry short. Now, this is the bar. Let me just make this a little bigger. I don't know if you can follow this. There you go. Let me just make a pointer here. Okay, this is a second entry short right here. Okay, price makes a new low. First entry fails. Second entry short. This is a bit of a trap, but you see price came back up here. Now, do you take this trade right here? Well, no, it's because it's a strong bull bar. You typically don't want to put a trade down here, but as you can see, it turned around immediately on a longer time frame. You would see that this would have been painted down. It would be like a doji. It would be like a fairly bearish bar, but I've got this right here. This line is what an area of support or / resistance, and as a result, this would have to be your target. So if you're looking at getting a target out here, it's below that. You'd have to limit in to try to get on the short side. I just thought it was a little bit risky. If you did do that, you'd want your stop to be up here. Might be worth taking. It did work out, but again, you don't know whether it's going to come all this way down. Maybe it's going to turn around. Maybe it's establishing a new trade, but you can still see it's fairly rangy. Price overshot the bottom of this channel. Second entry long right here. Now, I marked this one in green only because I didn't have these bars here. I didn't have this established yet. wasn't really sure that this prices were going to be heading down that direction. It wasn't until later where I put these in, and then you could see that maybe it's kind of a short-term trend channel down, like a slow trend down, but really more of a range. Price comes down to here. You see second entry long, and again, thinking that we're going to maybe test this high, but it doesn't quite get there. But it does get your 15 ticks off, especially if you limit it in. Again, you're going to look at using it a limit order down here. It gives you enough room to get out at least your first two contracts. And again, second entry short here. This is a better looking trade. The only reason I marked it in green is because it's the bottom of the channel. We still don't know whether maybe this is hesitation because this is now a new second entry long. Price makes a new high. First entry, pullback, second entry long right here. It's a pretty strong bar. I mean, it does go into this overlap. Whether you hold through it or not, that's where you'd be questioned. Looks like you've got support across these ones right here. If you drop this, you can see there's support there where the closes are. But if you were to take that trade on a second entry long, it wouldn't have worked out. You would have closed out, and as you see, when it turned around here, it really came. Maybe you're just pressing your opportunities a little too far by taking a trade right here. Now it does turn down. Again, if you establish this trade, as long as your stop is above the previous swing high, then you are all right. But again, not quite enough room to get out unless you really are very cutting it fine, but it does overshoot, goes down to this area, and you would have gotten your first two contracts off. So kind of questionable. I've got these green circles in here because it wasn't really evident, and it looks like it's moving down slowly, but you can see it's going down, pulling back, coming down. So it's really more of a range / slow trend down. If you look at where the closes are on these ones right here, you can see that it's a pretty wide range. When price gets down in this area, and when it gets down to just below the 45.90 area, and I'm thinking 46 is really an important number, right across that century number. And if you also look at the fact that if this was an area over the overnight, there seemed to be some resistance / support. And so if you pull this out, extending this over, you see that it's just around that same area as well. And that's why I marked this particular trade in green. Again, it's another second entry long. We do stack up there. There's obviously hesitation down here. Stops down to this area. Maybe it's an overshoot of this one, but you can say that if this is price, breaks out, pulls back, you have this first entry, pulls back, second entry long. Now, it does take some time to work out. This is a second entry long right here. Pulls back and doesn't get all the way down below this area before it does get some purchase and move its way up. Now, why it's in green? Again, it doesn't have a lot of room to get out. It's really your 15 ticks is about it. But as you can see, it kind of broke through, and once it broke through, we had this breakout, pulled back, and then it kind of took off. Now, after price made this new high up to this area, and you can see that kind of worked using the EMA as balance. Nothing through here I couldn't see unless it would break through this top. Now, extending these over. The challenge is when you're looking at making trying to define where the range is as far as a trade is concerned, as far as the market is concerned. Anytime price revisits the same area twice, you have to consider either the bottom or the top of the range. So as a result, when price came down here the first time, came down here the second time, this is really kind of a range because you've already had established here. But if you look at it from on the left side of the chart, it looks like it's more of a continuation of these areas where you see have some resistance. So if you look at it right across this area, you see where price revisited a number of areas. On both sides, didn't break through by much. This would maybe tested a little lower, but as you can see, it came and found some support right here. So if you think that price is just moving up, by the time it gets to this area, we have this first pullback. This is a second entry long, but as you can see, I didn't take this trade. I didn't mark this one because if you extend this over to this side, you can see that we're near the top, maybe of the continuation of this range from the left-hand side of the chart earlier in the day. So you can see there's this resistance around 46.35, let's take it, or 46.31. So there's resistance here, and we have this bottom range right at this area, right here, this area here at first. Now price is bouncing off the EMA, and it reestablishes, you can see it revisits here. First time, pulls back, second time, is kind of pulling down this area. And to right to here, around the EMA, it's stacking up. By this time, when I say that if you limit in here, it gives you opportunity to get out. And your target would be the other side of this range, but you'd have to limit it down here. And by limiting in, what it initially does is that your 15 tick stop is going to be below this swing low rate in this area, before this move actually took place. And so it gives you a little bit of room to get out. Now, you'd had to hold through this. You can see that stacking up here. If you have the wherewithal to hold through it, I would say stick with it. But if it stacks up a little bit and you see it gives you a few ticks up, depending where you're going as far as price, you might close up the break even +1 if you feel that you're feeling that it's having just a little bit too much hesitation at the bottom of this trade or at the bottom of this range. So if you look at price, if you get taken out like at break even or so forth, or the trade becomes a scratch trade, it does give you facilitates another opportunity to get in, particularly when price moves up here, pulls back, and again, you can see this doji means hesitation. It's a 1 bar trading range to the doji. Price isn't going down any further, and because this trend, we've got looking for another leg off this up here, looking at maybe this is going to be the bottom support. That's why I suggest I considered looking at taking a trade at the bottom of these ranges right here. This trade right here, if you were to get in with this one, that's a second entry long. Price makes a new high here. So eliminate this double top right here. First entry pulls back. Second entry. Now, if you put these bars together, you can see this is the green bar. Or the price makes a new low. Pulls back. But you can see there's buyers and sellers here on both sides of this. Pulls back again. Second entry long. Now, that's the only reason I put it down here is that it gives you facilitates maybe to limit in at this bottom of this trade here, because that's where you see where price opened. We came back down here before it actually took off. And once it got to the top of this range, you can see that the buyers overwhelmed the sellers right at the top of this range right here. So if you see right at the price of, let me just mark it out here, see what it is exactly. Let's call it 46.35. Price got to this area, you see it blew right through here, strong bar, comes back and then creates another hesitation right at the, again, 46.33 down to 46.26. So within these 10 ticks, I mark this trade as a green trade. It's off the EMA, second entry long right here. See it retest this other side. Pulls back again, and then we have prices stack up again. Another second entry long right here. I like this trade as well because now it's really confirmed that this seems to be the real bottom on this segment of range. And it takes a little while to work out. Knocks your first contracts off. Pulls back again to the EMA. Again, another opportunity again. A second entry long off this bar, the strong bar right here. It takes a little while to work out. And you see that, do we get the 15 ticks? Well, the 15 ticks is right here. This is really a play because you think that at this point in time, we're not going to have you had the first move up, first pullback, second pullback. I'm thinking that I consider this the same move, that we have another equal move on the way up here. And because there's moves within moves, price makes it to here, pulls back first time, float first time, kind of pulls down the second time, and then we can see moving up to here. So overshoots. And you can see, again, price is now really definitely on this trend. We're moving up. First pullback, second pullback, to now establish a new trend channel, which has now been confirmed, and moves its way up. Now this is getting close to, this is after 2 o'clock, but you see this is pretty much the last move, and this would have been a fairly nice trade. So you can see that on most of the time they're heading this all the way up, except for here. You're thinking that maybe price may be turning down a little bit, but you can see how slow it is. We have this, it's kind of trading on both sides of, let's say, the midpoint, and we call the midpoint right at, let's say, 46.20. It's called 46.20. You can see equally 46.20 prices trading on both sides of that, even all the kind of overshoots here, and then finds purchase and moves its way up. And then from then on, for the rest of the day, it's trading higher, up to $47. And of course, the range, where it opened at $45, $47, $3 range roughly. Anyway, that's how prices kind of moved up. That's the way I saw it. Might have been some more trades. There's some shorts in here. I mean, this is a short right here. Second entry short, move up price first time, second entry short, moved up. But I wasn't keen on going to the opposite counter trend. I thought the general trend was going to be upwards, except for this section right in here. But as you can see, any of the trades, if you just stuck to where, especially near the best trades are going to be near your EMA, and it's going to be near your trend lines, your trend channels. That's where your highest probability trades exist. So wait till price gets back down there. I mean, you can sell out here because you can take a short at this area because we're a little ways away from the EMA. But does it afford us enough room to get to the bottom? And as you can see, barely does. It would have worked, but it barely gets to the bottom here before, unless you can limit in. And again, limiting in means that you're going to have to buy basically blind. You're going to have to wait till the price gets up here. And that's something that I've talked to Mac about in the past. I remember once, and a couple years ago, I had an opportunity to speak with Mac extensively. Mac from PriceActionTradingSystems.com. And one of the things that he had talked about is for established traders, when you see a range like this, I asked him, he said, how was it that you were able to figure out to buy one tick or a couple of ticks down below where these matching lows are? Because I thought it was brilliant, the kind of idea that he had. And he said it was quite simple. How many times do you, when you sell at this area, do you have to lose money before you wise them and figure, okay, well, I'm going to buy down here? Or reverse, how many times do you buy at the top of this range that you lose money that you find that, well, okay, now I'm going to sell up here? And that was as simple as he would put it. So when he would see these kinds of areas where he would see like matching lows, and let me mark this off for a second. I'll show you what I'm talking about here. When he saw these matching lows, like this is the first time it goes low. Here's this next one. There's a low here. What is low here? And so you can see prices stacking up in this area. When he saw that, and of course this is a former area of maybe resistance, but when he saw this, he would look at making a buy right here, particularly if he's looking at a target in this area right here. That's how he would do it, particularly where it was stacked up. But where is it stacked up? Right around the EMA. It's a little bit higher, but this is a real midpoint in here as far as your trade is right here is concerned, but right at the EMA. And that's why he would look at it. That's how he would look at trades. And so what I thought was, and it came from looking at charts for literally thousands of hours that he was able to establish that type of price action. Of course, he trades the ES, and this is the CL, but the examples are identical. It's the same kind of approach. The difference is that CL moves a little faster. He doesn't have that experience on it. He sticks with the ES. He sticks with the one with instrument where I do the CL. And so, but the premise is very much the same. Anyway, that's it for now. Let me just put this other thing in here. You have any questions? Here's my email address, jksv@shaw.ca. If you have any questions about any things I've talked about, one of the things they miss is send me a chart on the 800 tick, whatever you're using, if you're having some challenges or problems, and with examination, I can probably explain why a certain trade moves the way it does. If you can explain it even after the fact, if you have the same type of monologue after the fact as far as why is a trade review is so important. After you've done your trades for the day, to take a look at the trades that you took or the trades that you've missed, or to review your trades every day, review the chart every day. That will really ramp up or help you to establish or to see things on the chart. And you keep working at it. It just takes practice, takes time. And you'll be able to, I'm sure that you'll be able to figure this out over a period of time if you can you have to put the time in. You have to put the screen time in to recognize this. Anyway, that's it for now. This is Vance. If you have any questions, please let me know. Bye for now.